Welcome to your commodity chart of the day. Clearly, there has been some significant move in oil prices over the last couple of weeks on the back of what's happening in the Middle East. Let's check out what's happening right now on the CFD contract USOUSD. And you can see here that drop that we've had over the last couple of days on the back of US action and then reports of a ceasefire. We've broken back through the 200 MA. You can see there it's sitting there at 28.62 to form what looks like a V-shaped reversal. So where we're at right now is we are back down to a level that looks important at around about $66. Put it back on the candle chart for a moment and take this back. You can see the importance of this level. The question is, of course, is this going to hold? Is the ceasefire going to be honoured by both sides in the Middle East? But at this stage, oil looks as though it could be bearish. It was moving up to 65 anyway prior to the conflict starting. So this may be a point at which it pauses. Even if there's no further action in the Middle East, would suggest perhaps if that's the case, we may find a range to trading somewhere between where we are now and possibly around about this 68 to 69 level. That would be a reasonable range for it to find itself in. And then we'll be back to the norm in terms of what moves oil price. But at this stage, that's where it is. Obviously, any breach of the ceasefire agreement may well see oil spike again. So this deal is far from done. And so for the medium term or long term picture, it's a very difficult one to call. Short term, there may be opportunities here should we breach $66 to the downside or even bounce off this level. So a couple of possible opportunities. If we look at the 30-minute chart, you can see there we have found ourselves in this range over most of yesterday. So one to watch over the coming hours. Trade safe and see you again soon. Bye bye for now.